Nvidia has a promising future. By selling, we lost out on a great chance. In the next 3 years, the stock may rise to at least $1,000 per share, so expect substantial increase. Do you have any regrets? In more specialized tactics, we possess it. The first thing is that, because of our research, it is no longer owned by the flagship strategy. We have pulled it down everywhere. Everyone is aware that Nvidia has made these incredible advances in AI possible, but they aren't considering who will stand to gain the most from them, and we have a strong opinion on that. Almost all of the stocks in our portfolio are there for AI-related reasons. They share the following four characteristics. 1. They are already very skilled at what they do. They have extensive domain knowledge in their own industry. 2. They have brought in specialists in AI. This is a severe matter for them. Over the past year, Nvidia's stock performance has been nothing short of extraordinary, and the company has been on an astounding run. The stock price of the corporation has increased by a staggering 206%. Both experts and investors have taken notice of this extraordinary rise, which has raised general optimism regarding Nvidia's prospects going forward. At the moment, an astounding 91% of experts recommend buying Nvidia stock. To find out what is causing this positive feeling and to see any possible warning signs that might be approaching, it is crucial to investigate the matter further. The difference between Nvidia's current stock price and the median price target issued by analysts is an important factor to take into account. Nvidia's stock is currently trading at about $134, although the consensus price target is currently $125. This suggests that analysts may need to adjust their price targets upward to reflect the stock's momentum, as Nvidia's stock has surpassed their forecasts. 3. They are widely distributed, ideally worldwide, but perhaps solely in the United States or in a certain region. 4. Their proprietary data is the most significant factor. Our businesses have access to data that no one else does, and they will be able to employ foundation models such as OpenAI, Anthropic, and Llama 2 owned by Meta. These are open source and free, and they will use their own AI expertise to construct specialized models on top of those utilizing their private data. They will continue to outperform their rivals and arrive at better solutions than any of their rivals. This suggests that you wouldn't reintroduce Nvidia into the benchmark portfolio even if its price dropped. It's interesting, Like everything else, its price dropped at the end of last year, and we did repurchase it since, based on our projections, it would be able to generate a 30% compound annual rate of return at its lowest points. Our analysis led us to believe that, at compound annual rate of return, compliance is 30%. That's a respectable return. We thought, okay, we'll put. When we saw that ChatGPT was back down there, even though it wasn't as good as many of the other companies in our portfolio. Since more and more people were talking about it, it soared off, while our other stocks were sagging. So at the start of the year, we made some readjustments once more. However, moving forward, do you believe? We are therefore always open. That rate of return projection from our 5-year model is what really motivates us, isn't it? Additionally, we concentrate on enterprise value, which includes bonds. It's not simply conservative. EBITDA, earnings before interest, taxes, depreciation, and amortization, is a figure that cannot be manipulated like EPS. Thus, our profile is extremely conservative. We believe that's a question we get asked frequently, just in terms of valuation. Although this demonstrates Nvidia's outstanding success, it also calls into doubt the stock's prospects for future short-term gains. It may indicate that Nvidia's stock is nearing a top, at least in the near future, if analysts do not modify their price targets appropriately. The impending Friday expiration of 5 million share options is another element that might have an impact on Nvidia's stock price in the days ahead. As traders modify their holdings, options expiration frequently causes the stock market to become more volatile. This can result in some short-term changes to Nvidia's stock price. Investors should prepare for any setbacks in the near future, even though the company's long-term prognosis is still favorable. To determine the mood of the market and possible volatility, it is crucial to monitor the stock's movement around the option's expiration date. The market for graphics processing units has long been dominated by Nvidia, and this dominance has significantly influenced the success of its stock. The competitive environment and the long-term viability of the present demand for Nvidia's products must be taken into account, though. How are these multiples to be paid? We're paying large multiples now because we want and support our companies to make aggressive investments in order to take advantage of and outperform their competitors. Our rate of return expectations are driven by revenue growth, margin growth, and overcoming the headwind of multiple compression. Therefore, we assume that the multiples you see on our stocks today will compress dramatically over the next 5 years to little more than market-like in terms of values. However, we do not believe that to be the case. As Nvidia sets a new record, the S&P 500 and the Nasdaq had record highs and closures, indicating how quickly the company rose to prominence. Another day, another Nvidia record. With a 206% increase in stock price over the last year, Nvidia's recent success has been nothing short of amazing. The company's solid fundamentals and development potential are reflected in the analysts' positive view, with 91% suggesting a buy. Half a year ago, people would occasionally remark, "Well, I like AMD as a comeback kid," and they're going to be kind of second on the wave of the AI crest that Nvidia started. And based on what we've seen, particularly in the last few weeks when you've looked at the results from HP and Dell, Nvidia is essentially just suckling up the profits and gross margins in this market to the tune of about 75%, while others are content to follow along in the hopes of later selling other services. However, they are gaining the majority share. Don't tamper with success then. Therefore, Nvidia's biggest hurdle is undoubtedly competition. In addition to its clients and competitors, hundreds of millions, if not billions of dollars are being invested in venture capital for startup businesses that are solely targeting the Nvidia market. However, my opinion of the competition is that Nvidia will continue to lead. It's an enormous pie. Nvidia will continue to lead, but AMD, a reputable company, will receive a piece. I believe that Intel will make a comeback in PC-oriented CPUs, but all of their claims about AI, maybe they get there, but I will believe it when I see it. Intel has been the gang that hasn't been able to shoot straight for about 20 years now, at least on the manufacturing side, Joe. To put things in perspective, Nvidia's revenues, despite having tripled in the past year, nevertheless fall far short of those of Apple and Microsoft each year. They also have very strong, long-lasting margins. Although it's unlikely that Nvidia would ever overtake Apple or Microsoft in the technological ecosystem, it might become the most valuable corporation in the United States. Yes, I believe that is feasible. Investors should be aware of a number of things, though, since they may have an immediate or long-term impact on Nvidia's stock. The current gap between the price of Nvidia's stock and analysts' price targets raises the possibility that short-term gains may be limited unless analysts raise their targets. Additionally, the stock price may experience short-term volatility due to the impending expiration of 5 million equity options. Furthermore, even though Nvidia has led the GPU market, investors should keep a careful eye on the company's growing competitors and the durability of the market's present demand. Though investors must remain alert and ready for any short-term volatility, Nvidia's future is still generally bright. Long-term prospects appear bright, but evaluating Nvidia's sustained performance will require closely monitoring market developments and competition. Your opinions on Nvidia's future would be greatly appreciated. Is a correction in the stock price imminent, or do you think it can continue to rise? Tell us in the comments section below.